Hi, I'm Tiffany Devan, and welcome to the Higher Education Access Corner. Today, we have two exceptional I want to call them co-hosts, but co-hosts who are here with me today. One is Linda Pacewicz, as well as Dan Wray. They are both account executives with our PA Forward private student loan program. And we're going to talk to you all today about understanding education loans and talk about what to compare, how to figure them out, some different options that are available to students and families in PA, as well as listeners everywhere else. So Dan and Linda, welcome to the podcast.
Thanks, Tiff.
Thanks, Tiffany.
All right. And before I jump in, I do want to share just a brief bio for both of you. So for Linda has been in the student funding industry for 31 years. She's worked with PHEAA through all of those years. And more specifically, she's worked with PHEAA or for PHEAA for the last 11 years. So 31 years in the industry is no small feat. So thanks, Linda, for being here. And then Dan beats us all. Dan has actually been in the financial aid industry for 33 years. He's currently, like I said, an account executive for PHEAA's PA Forward student loan program. He covers the western part of PA. And I should mention that Linda covers the eastern portion of Pennsylvania. In addition to working at PHEAA, he's also worked for post-secondary schools, some educational lenders, and IT service providers as well. Those of us who know Dan in the financial aid industry know that he comes with a wealth of knowledge, great stories. So Dan, I'm hoping you will not disappoint with a few of those stories that come in to play as we're talking today. But again, thank you both for joining me.
Thanks, Tiff.
Thank you, Tiff. Yeah, many of my stories are true. So we'll throw one or two in there.
Absolutely. So now, before we actually get into the topic of student loans or educational loans, let's talk a little bit about affordability and what families should maybe think about, or what should they be considering when they're thinking about affordable options or options around affordability.
Yeah, Linda, you can lead off on that one.
All right. Well, when a student's thinking about what I should spend and how much can I afford to borrow, the one thing they really need to do is research what can I expect to earn from this education. And that's one of my talking points when I am talking to students. And I will recommend either mynextmove.org, which is created by the Labor Board of Statistics, or educationplanner.org, which is a PHEAA site that can allow a student to say, if I'm following this career path, here's what I can expect to earn. And that should be the benchmark about how much debt you should go into before deciding to borrow. And I know Dan will probably talk about this, but certainly, you want to make sure you're applying to wherever you think you want to go to, because you really don't know what that gap is going to be that you have to borrow for until you get the financial offer letter. And that's my starting point all the time is understand what you're going to do and how much you are going to earn before I decide how much I want to borrow. Hope that makes sense.
Yeah, that's the big red stop sign that we have usually multiple times in our PowerPoint presentations. That stop sign says, don't borrow more than your starting salary. And that rule of thumb, I think we borrowed that from from NEFI.org, the National Endowment for Financial Education. So great rule of thumb that keeps your loan payments reasonable. Another great website that I like to start with is PACareerZone.org, because that one gives the opportunity to begin with the end in mind, or reverse engineer your future happiness. You can start with, I want this kind of car, I want this kind of house, I want this kind of vacations. And then it'll work backwards from there and say, okay, well, here are the careers where you can earn enough money to live that kind of lifestyle. And then you can work back from there, go to Education Planner, find the schools that offer the major to get you into that career. And then the next step for me would be net price calculators. Before you get that official offer, like Linda mentioned, before you get the official offer from the school, you can always go check out their website and find their net price calculator and find out what your price is going to be. at a particular school. Not everybody pays the same price. I always look over my shoulder when I'm about ready to say that I've learned something over the years. I want to see if my wife of 41 years is listening in, and she'll say, "Oh, really? He can learn." And but I have learned that not everybody pays the same price to go to a particular school. You need to find out what your price is going to be, and then calculate your affordability there.
That's true.
Right.
And
If you're not,
if you all can, for a quick second, can you further explain what the net price is? Because there are some students who don't quite get what a true net price is. So why do they need to look at the net price calculator, especially if they're looking at more than one school? How can they best utilize the calculator?
Dan?
Yeah, so net price, really, that is your sticker price of your school, the published price. There's different words for it. The federal definition is cost of attendance,
Mhm.
COA. But to me, it's the sticker price. It's tuition fees, room, board, books, living expenses, kind of everything I need to think about in terms of a cost of a school. You take that as your starting point. You subtract your free money, your grants, your scholarships, stuff that you don't have to pay back. And the difference there, sticker price minus free money, that's your net price. So sticker price is irrelevant. I don't care if a school's sticker price is $85,000 a year. As long as I have $85,000 of free money to go there, then I like that net price of zero. Or can I just get enough free money to afford that school? Maybe the sticker price 85 grand. Maybe I get $50,000 worth of free money. Now I've got a little bit more reasonable school to look at there. So that's what I think of when I think of net price, and that's the whole ball game right there. What's my price? Sticker price minus my free money.
Thank you for clarifying that, because I do talk to students, and I know you all do too as well, sometimes, where they'll say, I'm going to absolutely avoid a school that's in a certain price range, and they're only looking at the cost of attendance or that specific price. They've not applied for financial aid, they've not done for anything else. So
That's what I
you're good to
did.
clarify. Yep, that's what you did, Dan.
Absolutely. Yeah. No, nobody in my family, well, you look back, my grandparents, probably eighth grade was the highest that they ever got. And nobody knew anything in my family about higher education, except number one, go to college, boy. And number two, we can't afford it. So that was, if a school cost anything, I crossed it off my list. So that was a big mistake. I didn't know anything about it. I didn't know anything about net price. All I knew was sticker price.
Right.
Again, that's why one of the reasons why I'm so glad that you all are here and we have the podcast and all the other avenues that were there. And Linda, you were going to say something. I didn't want to cut you off from what
No,
you
it's
were.
fine. It's just one of the things, it's really important to understand what I have to borrow and whether I can afford that and pay it back, because many students, parents want to, fulfill the student's dream of going to that school. But if it's a hard decision to make sometimes, that this is just not affordable for us. And, but your student will love you in 4 years or whatever it takes to finish that career when you're telling them, don't get into this debt. And we always say to families, if you allow that to happen and you look up a career choice and I can start at 56,000 and I'm $150,000 in debt. Well, mom and dad, make some room in the basement because those students are moving back home. They can't afford an apartment and a car and food, utilities, and that debt you let them take on. So affordability before you decide to borrow is really important. And of course, when you complete that FAFSA, which is the first step, and I know you have you have podcasts on that, right? Yes.
Yes.
That they get that federal student loan to start them out. And a lot of students don't realize they actually are automatically given that loan, but 5,500 in the first year, and that will be in that the financial letter that they get. It'll be deducted from the balances, but it is a loan, and they have to
Mhm.
remember they have to pay that back. So
Yeah.
it's really important to understand you're starting out with loans, whether you think you are or not, and and they do have to be repaid.
So that's a nice
So
segue
that's
into like
important.
you kind of started talking about it. What types of decisions should families be thinking about before borrowing? You mentioned FAFSA. So FAFSA one is, completing the financial aid
Mhm.
paperwork, which again, primary application is FAFSA. But what are additional things should families be thinking about before they actually tackle a student loan?
Yeah, my first decision is if I can get away without borrowing, that's what I want to do. That's
Absolutely.
so can I find that school? Can I get out there on Education Planner? This is like my two-step approach to post-secondary financial bliss here. And that number one, go to educationplanner.org and do the Find My Perfect School. Plug in all the criteria for your schools, suburban school, big school, small school, offers this major, offers that major, has this type of club, this type of sports team, whatever. Put it all in there, find your perfect schools, do a net price calculator at every one of those schools' websites, find that really, really good school that's going to be affordable for you. Hey, maybe just do some wide open internet searches too. How about schools that are free to every student? Or schools that meet full financial need. There, do those
Mhm.
internet, so you might find, do all of this research. I know people, it's tempting. You get that laser beam focus. My parents went to this school. My best friend's going to this school. Everybody I know has gone to this school. Well, that school might not be affordable for you.
Right.
And so you got to look around. I'd love to see, you can do 25 net price calculators in a weekend, no problem whatsoever. So I love to see people doing all that kind of research. Your free or almost free school might be out there somewhere. Just got to do the homework. I learned that the hard way. Nobody came to my front door ever and said, "Hey Dan, don't you know you applied to our school out here because your school counselor told you to, and we
Right.
sent you a letter and you didn't open that letter, and in that letter was a free education to MIT." Uh,
There you go.
Nobody came to my door and said, "Dan, why didn't you open that letter? Hey, what's wrong with you?" Nobody came to my door. I didn't open the letter, and so I didn't find out about that, right? So if it's just digital now, so if you're not doing net price calculators, if you're not out there doing this homework, you're not opening letters. You're being it's just in a digital sense. Got to do that research. Those
Yep. Don't
affordable
miss the
schools might be out
opportunity.
there for you.
Yeah. You don't want to miss
Right,
miss out on any of those opportunities um,
right.
that are out
But
there.
even when they're
And
borrowing, I mean, I will tell you tips. Even if you do end up that you're taking a loan, you have to remember that it's an investment in your future as well. Because the Labor Board of Statistics will show you that the more education you have, the more likely you'll earn higher wages. And the more
Mm.
education you have, the more likely you won't be unemployed, even in hard economic times. So when students are afraid, like, I don't want to get any loans, they had just as long as it's affordable for them and they're going to be able to manage it as they get out of school and get into life. I mean, that's the most important part because it instead of looking at it as a bill, they should be looking at it as this was an
Yeah.
investment in my
Yeah, and
future.
that's a great
So that
internet
helps.
search too. That
it
internet
is
search for, because there's people who make lists of schools, and one of the lists is best return on investment schools.
Mhm.
yep.
That's another great one to look at. I think Harvey Mudd comes out pretty good usually every year, and you'll recognize some of the names on that list that are great returns on investment. A lot of them are high sticker price schools, and that can turn some people off. But like Linda said, look at it as an investment. What kind of income you're going to have coming out of that school versus what you might have to borrow to go to that school. That's really the value proposition that we have to be
Mhm.
looking at when we're looking at post-secondary education.
Totally agree. So I do want to stop just for those listeners just for a minute because you all mentioned a couple of websites. One is educate. You mentioned Education Planner. So for those who've never gone out to the website, it's educationplanner.org. So it's Education Planner, one word, .org. Again, that's one website that's out there. Linda also mentioned My Next Move. Is that mynextmove.org or .net? .org. One word.
Or
One mynextmove.org. So again, two great websites that were mentioned. That's for that. Hopefully the students and families can go out, do some research on and get everything you need. And I also tell students, don't wait until your senior year to start your research. So start this research a lot earlier. Start pondering the careers, start looking at the different schools, start factoring the price range so that you don't feel overwhelmed when you start
Mhm.
your senior year in high school. So
Yeah,
again, great.
excellent. I'll throw one or two more out there.
Mhm.
I'll say PA Career Zone,
That's
all
right.
mushed
Yeah.
together there, pacareerzone.org. And then another PHEAA site, My Smart Borrowing. all
Right.
mushed together, no spaces, no dashes or anything. mysmartborrowing.org, where we know the average cost of it. We know the cost of attendance at every school for the most part, just about every school. We know the
Mhm.
average financial aid package at pretty much every school because they have to report that to the federal government. We know
Mhm.
the average starting salary for most careers. And so My Smart Borrowing can show you on average, if you go to this school to major in this to get into this career, whether or not you might be borrowing too much money to do that. And then you can start thinking about, there's budgeting tools out there. So that's another great site, mysmartborrowing.org.
It is. And I use that site a lot with students when I'm talking to them to encourage them to continue to look for scholarships. If I know they want to go to a pricey school and they really haven't found a lot of financial aid, I'll say, okay, well, let's put this out there. This is what you're going to borrow. So keep looking for those scholarships to bridge the gap before you're crossing the school off the list. Let's see if you can get these numbers down to what you might have to minimize in borrowing, what you can minimize in borrowing. Um, let's see, we can get you to look for more scholarships. So I'll use that also for various reasons, but that is a great site, especially for the student, because many students their freshman year have never had any type of debt before. So they're not quite aware
Yeah.
of, what it looks like on the other side once you're a graduate or you've left school and you have that bill now to pay.
Yeah, and that's so this is why we always start out these presentations about
Mhm.
loans with how to avoid them, how to minimize all of that, because yeah, your future self will love you if you do all this kind of stuff ahead of time and keep that borrowing to a minimum. So lots of tools out there to help people keep that to a minimum. Borrowing, though, is like Linda said, is a good investment for higher
Mhm.
education if you do it right. And
Right.
we always do our prelim like this before we get into, okay, now that you know you're going to borrow, now here's how you handle that.
Right, right. And like we said, a student will receive a federal direct loan just by completing the FAFSA, but there are other loan options out there. And one other thing to think about if you're looking at all the different private loans that are available, of course, the state has the PA Forward program, but a family also wants to look at their credit. And they want to make sure they're going to have a good cosigner to help the student get a very good rate loan. And a lot of families don't think about that until they're denied with an education loan, because an education loan has no collateral. So lenders or entities are looking at their debt to income, which is the income versus your monthly payments, not your whole debt, just can I afford another payment, and the credit scores. And so sometimes families need to make sure their credit scores are in good shape so that they can borrow to get that private education loan that will give them a much better rate than some other options. So they want to have as many options as they can by doing a little legwork ahead of time.
Yeah, when you're getting into the higher education years, that is a great time to
Mhm.
go to annualcreditreport.com, get a look at your credit report, make sure everything looks hunky dory out there. Yeah, now is the time, ahead of time, to think about that sort of thing, not when the school tells you your bill is due in 3 weeks.
Right,
Absolutely.
right.
Totally
And
agree.
Dan, there might be some corrections that need to be made on those
Yeah.
reports, right, Dan?
Yeah, exactly. Yeah, back when I used to drive ships for a living, and move around. Well, my wife moved around a lot. She was the landlubber, and I was at sea. And yeah, somehow I ended up over the years somewhere. I was applying for a car loan, and I looked at the interest rate. It wasn't too good. They were going to charge me fees. I was like, "What's up with that?" I make pretty good money. And I look into it, and sure enough, the last house that I sold is still on my credit report. I made good money, but not good enough for two mortgages. So
Mhm.
yeah, that was my debt to income ratio was hurting me there. So to look, if I hadn't looked into that credit report, yeah, I might have not realized that that was inaccurate.
Right. So mistakes happen. So luckily you did find, that mistake. Sometimes students and families don't realize it. They don't know to check it and they don't know why they're getting a higher rate or why they're being denied because they don't continue to look further into it. So good point to for both from on both of both of you. Number one,
Mhm.
to check early be prepared before you actually need to actually apply for the loans, and check annually because it's free to do so.
Free to do so. And it's relatively inexpensive if you want to pay monthly for continuous access. I don't know, some credit cards offer that, some banks offer that if you have a checking account there,
Mhm.
or you can pay a monthly fee for, on the Experian site or the TransUnion or the Equifax site. The credit bureaus have great websites. So for anybody who wants to really, really keep a sharp eye on their credit, with the goal being to pump that credit score up as high as we can get it.
Mhm.
But one proviso here, one caveat is that when it comes to that federal student loan that Linda's talked about a couple of times, the one you do your FAFSA, and most schools are going to automatically package your federal student loan, your federal direct student loan. There's no credit check on that one.
Mhm.
But later on, if the parents want to get a Federal Plus loan, or if you want to get a private loan, then yeah, there's going to be credit checks involved there.
So let's
Wanted to
let's
point
move
that
on.
out about
Yeah,
the federal student loan.
yeah. So
Yeah.
let's keep that part flowing because we are mentioning the federal student loans. So there are different types. You've mentioned there's something from the parent. You've also mentioned the student. So federal direct loan, we know comes through Department of Education, U.S. Department of Education. And then there's a plus loan. So if you all, want to just elaborate a little bit on the difference. If not, I can elaborate on the difference between the two.
Stop
There
laughing
and
at
then
me, Linda. Stop.
The
I know
reason
you're laughing
I'm
at me.
the reason I'm laughing is because that is Dan's niche with that
that's his
Parent Plus
thing.
loan. I mean, it's a little dangerous, and you'll have to cut him off. But go ahead, Dan.
Where's my soapbox? Where's my soapbox? I need to
Take
stand
it
up
away,
on
Dan. It's all you. Take it away. Let's hear it.
being a little facetious here. And by the way, facetious is one of those very, very good words. That facetious has all the vowels, right, in alphabetical order. A-E-I-O-U. There you go. And facetiously, you can even get the
You're
Y on
right.
the end there, alphabetical order. Not too many of those. So I'm being a little facetious about the plus loan. I have a couple of beefs with the federal parent loan. And
Okay.
number one, it's not a real credit check. They're not going to look at your FICO score. They're not going to look at your debt to income ratio. They aren't going to require proof of income. They're only going to look to see if you have what might be categorized as bad credit. So 90 days or more delinquent on bills totaling 2085 or more, declared bankruptcy in the last 5 years. That's all they're going to look at. So many people apply for the plus loan. The parents apply for that plus loan so they can be denied, because if they're denied, their student can get more in the unsubsidized student loan program through the federal government. But the parents apply to be denied, only to find out that even though they've never been approved for any loan in the last couple of years, they get approved for this. Why?
Right.
Because it's not a real credit check. And so it's very, very easy to get way over your head in parent loan debt because of that. On your $30,000 income, if your student's going to a $70,000 sticker price school and they're not getting any other financial aid, parents, on your $30,000 a year income, if you don't have bad credit, you can borrow the whole $70,000 every year from now to infinity. And unless you have bad credit sometime in the future. So not a real credit check. Number two, there's a 4.228% fee on that loan. So for every 10,000 borrowed, if you're expecting 10,000 to show up in your student's account at the school, you're going to be in for a $422.80 surprise, because that fee comes off the top. All right. So I know that there's some people who are in the boat that maybe they can't get approved for anything else. They want to get that plus loan, but wow, you have to be careful. It's very tempting. Very tempting. The student says, "Oh, but I really want to go to this school over here, and there's got to be some way we can afford it," and it's real tempting for a parent to just say, "Well, we'll just borrow what we need, and something will happen later on, and we'll think about that in the future," only to find that in the future you're way too far in debt and now life isn't too fun. Be careful with federal plus. Step down from soapbox, Dan Wray, and move on.
But that's a real situation that you are describing. So I'm glad that you do share that. But I want to back up just a little bit more. So even for that student who knows that they need student loans, I always say federal direct one is the first option, even before considering something
There you
from
go.
the parent or even a private. So check out those options. They generally are going to have lower interest rates. They're generally going to have more flexible repayment terms. And I also tell students hopes and dreams are all you need. They're not going to check your credit. They're not going to ask you to provide proof of income as the student. It doesn't place your parent on the hook for this particular loan. But again, it still should be something that a student is doing. They're checking wisely, because as you borrow, you still have to repay it, whether you graduate or you do not. So again, federal direct loans are still the first option, I think personally. If it's affordable for you to take out, then it's definitely worth considering. You still have to complete the FAFSA application in order to be considered for that. And then also I tell students, if you then need to go beyond that federal direct loan, again, you do, like you said, Dan, there's that plus option, there's the private option, but the plus option, some things that I see happening a lot, and I've seen over the years, is the student will get the parent to take out the plus loan because they really, really want to go to the school. It's the top choice. They're the first kid going to college. So the parent says, okay, they sign off. Well, now student number two comes into play. Well, now parent applies, they get approved for the second child. And their assumption is, well, the kids are going to just take over these student loan payments once they graduate. That's my agreement.
In fact, they'll ask us, right? How do I get this transferred over into the student's name?
Right.
Well, the answer to that is you can't.
You can't. Right. And so again, more pitfalls. So I always say, I don't think the plus loan is a bad loan, but it's definitely something that parents really want to do their research on. And I know I've heard you all say this before on some of your other webinars and presentations. Being denied is not always a bad thing, because it's letting you know, and I'm paraphrasing, it's basically letting you know that this is not something you can afford right now. So you may not be in a position to repay it, and it could have more damaging consequences later on if you're trying to take on too much. So it's kind of like that warning that says that you might be getting in over your head. And that's a real conversation I've had with parents where they're like, hey, you know what, I have all this debt right now. I can't pay it. My kid's not in a position to pay it. What happens? And you don't want to compromise your credit, after the fact. And there's not too much we can do to tell them. So again, education is key, knowing what those options are that are out there. Any other suggestions you all have about avoiding the pitfalls before
parents have a stop sign too. Remember, the student stop sign is don't borrow more than your starting salary. The parent stop sign is don't borrow more than your current salary.
Good one. Never heard that one. So that's a good thing to reference, and hopefully our listeners will heed the caution and share the news as well for parents for them on that one. That's good to know.
And as they borrow, I mean, if there is a reason they have gaps, certainly the private loans are there. They're structured to help a student and a family pay for an education. And I'll just put a plug in there that they should check PHEAA.org/PA Forward, because the PA Forward is a loan that PHEAA offers our state residents to attend anywhere, and they offer extremely low rates with benefits, and they should keep it in their mix, because we don't do a lot of direct marketing. So checking that out and just comparing it to the other loan options available is the key. And also to remember that, a lot of times schools don't take the time to explain to a family that you don't have to borrow everything. So you can mix and match to get to that balance that you owe. So if you have a little bit in savings, or maybe you're really nice to grandma and she says, well, I'll give you a little bit to help you pay for education, that's a good thing. Or maybe they want to use a little bit of that balance in a payment plan directly to the school. So they don't have to get into debt for the whole balance. And a lot of families will look at that and think that I have to borrow for everything. So it's really up to the family. Financial aid is not a one size fits all. So it's really just working it out, looking at what works for you.
I agree. A couple more points I want to add on and get you guys to give me just a little bit more from your perspective. So when I'm talking to the families and we're talking student loans, I usually say federal, and then you consider your options. There's a plus loan, there are private loans that are out there. And I do have a conversation with families. Sometimes they will say, well, you know what? A plus loan is a viable option. However, I do not want to be on the hook for this loan for a great deal of time.
Yeah.
So private loan might be the best option for them. It's not always usually 9 times out of 10, they don't need to do both a plus loan and a private student loan. But one of the, I think, benefits of taking on a private student loan for those who think it might be their best choice is, number one, it doesn't always have to be in the parent's name. So you have your federal direct loans in the student's name. And then depending on your lender, you have different lenders that are out there, different options. So at the end of the day, you read the fine print, understand the terms, you understand the conditions. This is not they're not federally backed student loans. So it's not coming from the Federal Department of Education, but understand the terms, understand the conditions. Sometimes they're in the student's name. Sometimes it requires a cosigner. It does not have to be the parent. One of the great features, and I'm going to highlight PA Forward when I say this, and I'm going to allow you all to elaborate just on all of the terms and some of the key highlights with PA Forward in a second, if you don't mind, and I don't think you will, but there's the cosigner release clauses. Many lenders have a cosigner release clause. So if the student, once they're done, they're going into repayment, they meet these obligations, basically they can stand on their own, cosigner comes off. That's usually one of the benefits that I do know that many families can appreciate with having a private student loan that is out there. And I always say at the end of the day, the household needs to choose the loan that's the best fit for them. But if you all, just to take this opportunity, because you are our PA Forward reps, give us some additional details and the different talks about some of the different types of the PA Forward loan for those who want to know more information and tell them how they can get additional details.
Yeah. Hey, you want to grab that one, Linda?
Well, first of all, you can go to PHEAA.org and you will definitely see the PA Forward loan. It is the loan through PHEAA. It benefits our state grant program as well, and it will offer lowest rates along with benefits for graduating. We give a 0.5% discount when a student graduates, which is, as Dan would usually reminds me, it's the highest graduation benefit offered out there right now. There's also 0.25% interest rate for direct debit for paying it. And because our rates are so low, many students decide to utilize the repayment benefits offered because you can defer it just like the federal loans, and students do have more repayment options than the parents because they're in school. So a lot of times the parents will use their good credit to get the student the best interest rates, and as you said, they can be released, but they can defer the payments. They can also do a $25 per month, get them into the repayment habit and help pay down their debt. They can do interest only, or they can do immediate repay. And of course, your interest rates go along with that. But what to watch for in a private loan is how high can it go? And our cap is at a 7.69 APR. And you'll see 14, 15% out there. And that's what you really want to watch for is how high can it go? You can repay in a 5, 10, or 15-year term. So it gives you lots of different options. And it's even for our border state residents attending Pennsylvania schools. So it's worth the look. And you can, like you said, you can release the cosigner after 48 on-time payments, which is realistic. Remember, a student has to be able to afford that loan and be able to have his own credit rating. So when you see a short-term cosigner release, is that really feasible? I don't know. It can be, but it's realistic to set the bar so that your student can get you out of that loan by releasing you.
Yeah. I'd
Dan,
say
what did I miss?
another great way of releasing a cosigner is if the student gets on their feet and they get a good credit rating 1 year, 2 years after graduation, then get a refinance loan. Do a refinance loan in the student's own name. That pays off the underlying loan or loans, and that gets the co-applicant off the hook. I'd also like to throw, just generally speaking out there, maybe two things. Number one, who can be the borrower for a parent type of a loan? On the federal side, it's got to be a biological, adoptive, or it has to be a step parent who's married to the custodial parent. In private loan world, parent, we can do air quotes for because with a lot of lenders, it can be maybe aunt, uncle, grandparent, somebody who's got guardian, somebody who has responsibility for the student. And another thing I would throw out there, generally speaking, for people who want to do some of their own calculations out there before they get into borrowing, a parent loan or getting into any other type of a semi-credit tested or real credit tested loan, I'm going to say, generally speaking here, if your credit score is below 650 and or your debt to income ratio is 50% or more, meaning that if you look at your monthly gross pay, 50% or more of that is going out into required payments, mortgages, car payments, minimum payments on credit cards. If either of those are true, credit score less than 650, debt to income ratio 50% or more, I'm going to say, generally speaking, you're going to have trouble getting a private education loan. And in that case, I would say, even if you could apply for a Federal Plus loan and get approved, because that's not a real credit check, I would say if you're in that scenario, maybe you might want to rethink getting a loan. Maybe you need to look at a more affordable option of a school. Maybe you need to go back to the financial aid office and say, hey, can you hit us up with any more scholarship money or federal work study money or something that can get our debt load a little bit lower. That's, like Linda, like Tiff has said, it's not necessarily a bad thing when it looks like you're going to get denied for a loan. That's a time to do a lot of research and thinking about this whole thing, because loans, you sign a promissory note and they have to be repaid, and usually over a long period of time. So it's something to consider very seriously before you sign that promissory note.
Totally agree, 100%. So far, this has been really great. Have we missed anything so far? Anything we want to touch on that we've not regarding student loans in general?
I would say check us out on our PHEAA.org/virtual for some of our webinars, because just about every topic that we've talked about here, we do a whole hour webinar on from time to time throughout the year. Check out our webinars, PHEAA.org/virtual, and sign up, check us out, for those deep dives into individual topics.
Right, you have one called Deep Dive into Credit, I believe, isn't it? Deep Dive into Credit. And if you wanted, for the listeners, maybe I don't know if you know them all offhand, so I don't want to put you all on the spot. Give us a couple of the different titles. That way we can kind of like maybe get them. You might be piquing someone's interest right now, and they may want to go check out those webinar topics, even listen to some of the recordings that are out there, or catch you on one of the upcoming ones. So
Yes.
you know of a couple of the titles that you have coming up, feel free to let us know, and we can see
What did we agree on, Linda? We talked about this the other day.
Let's see.
What did we agree on here? I know January is we paired up learn about education loans and deep dive into credit. I know
Okay.
we paired that up.
And then this month, we're doing understand the gap, and also the gap in the balances, and also understanding the financial offer letter, because they can be extremely confusing when you start to receive those. What do I really owe?
Right.
And so we're doing webinars on that, financial bliss to post-secondary education. Let me think here. Things that are related to paying for education, we mix it up, because we could go on for hours here talking about this. Dan and I, and you as well, have enough experience that there's always different scenarios and things that come up. But certainly feel free to contact any of us for any additional information. I mean, we're on the websites, we're on our webinars, our contact information, or even just contact Tiffany and she'll set you up.
Linda and I do. Our focus is private education loans. Tiffany and her team, they're focusing a lot of the front-loaded process, FAFSA, applying for financial aid. So if you might notice a theme when it comes to our webinars, our end game is usually, how do we boil this down to, You've done everything right up to this point. You've gotten as much free money as you possibly can. Now it's looking like you might have to borrow. When we say we're calculating the gap, that's what we're looking at. What's the gap? What might we have to borrow? Linda and I, our end game on our webinars is usually, how do we calculate that? How do we keep that reasonable? How do we make that borrowing decision responsibly? So that you'll find that in our webinars, but we come at it from a bunch of different angles. And when we do our Learn About Education loans, part of that is going to be slide after slide of me getting up on my soapbox and doing a side by side of private education loans versus federal plus loan. So if you want a good chuckle, you can join us for that.
He's in his glory then, yeah.
I can tell. So the one good thing I can say is for our listeners, I believe the listeners got a nice introduction into what you all do as our PA Forward exec team, part of our PA Forward exec team. And then I also, hopefully that everyone got a good understanding about education loans, learning about them. Key things or key takeaways I'm hoping everyone gathered is that, number one, before you borrow a student loan, understand affordability. We talked about that, knowing what's affordable for you, doing your research up front, everything from your careers that the student is interested in attending, what's the starting salary going to look like. And I also say, don't think that you have, when you're doing your research, you'd be surprised that the school that you thought you wanted to go to may not be the school that you end up with, not just for affordability, on an affordability issue. You could just learn some different things to figure out that the school is an overall good fit. At the end of the day, I always tell students the goal is to get the education you need to go into the career that you want, so that you can then live the lifestyle that you wanted to live. So you have to do your research up front, but you don't have to break the bank in order to get it done. Do you want to add something on to that, Dan? I don't know if you were.
Just, what she said, what Tiff just said.
Okay. There you go. And that's I think the whole point of it. Do your research, know that there are viable options that are out there. If you do have to borrow, again, you want to exhaust all free financial aid options first. So complete your FAFSA, complete your Pennsylvania State Grant Form. Also make sure that for students, you're continuing to look for those scholarships. And then if you need those student loans after you've done your research, federal direct loans are a great option to start with for the student. Do additional research on whether it's a private loan, whether it's a plus loan. You've heard Dan spill on this. So again, dig a little deeper. Don't hesitate to reach out to them, to myself. Also check out their webinars that they do have, because they do a really great job of giving you a nice variety of information regarding student loans, and then some additional pieces beyond that. So I can definitely say it's been a pleasure having you all on, and I'm going to kind of like put it out there now, because we're out there. I want you all to come back for some future topics, for some of the things you talk about. You can't say no because we're on the air right now. So you have to come back to share more information on additional topics. Is that a yes from both of you?
Sure, absolutely.
Yeah, boy, that's shocking. I don't always get invited back to places.
You're coming back, Dan.
Hey, this is awesome.
Anytime you'll come back, we were definitely happy to have you. To all of our listeners, hopefully, again, you've enjoyed everything that Dan and Linda talked about today. You've gotten a good understanding of it. Make sure that you continue to tune in to the Higher Education Access Partner. We'll have more conversations with Dan. We'll have more conversations with Linda, and then some more topics just on higher education access and affordability. So thanks everyone again for tuning in to the Higher Education Access Corner, and we'll see you soon.